What do you see Treasuries doing in the next 2 to 3 weeks? We saw what the BOJ had to do to adapt and adjust. Will others be following suit?
Well, it is interesting. I think the BOJ particularly, and in fact for weeks, perhaps even for months, you could say that the Bank of Japan Governor Kuroda has really been protesting against this perception in the market that the Bank of Japan could also be perhaps backing out of its huge quantitative easing program this year. And he's protested that that isn't the case. And I think this week we've seen the Bank of Japan really put its money where its mouth is. So they've been watching that 10-year yield drift higher a bit, that they really wanted to put a lid on that. And again, they're suggesting that they're going to carry on. We've also, of course, seen some ECB officials suggesting that they need to maintain an accommodative policy stance, that CPI inflation is still quite low. But the market is, of course, being really quite concerned. We can see this throughout bond yields. And a lot of that concern is related to the US, the strength of the economy partly, but I think also the fiscal situation that's also playing its hand in the US markets. The market concerned perhaps that the tax bill wasn't properly funded, that infrastructure bill that Trump wants to promote this year may not be properly funded. We've got a budget deficit which was rising already in the US on the back of just demographics alone. So you put this underfunded fiscal spending on top of it, it changes the dynamic, and potentially that's not very good for the dollar.
Jane, what does it mean, therefore, going forward? Are we going to see a lot more dollar weakness? And if we are, what does that mean to Fed policy?
Well, again, I think if we do get dollar weakness, well, that is actually inflationary. So we could see the Fed really wanting to do those interest rate hikes that it said it would. But of course, we still don't have an awful lot of wage inflation. And that's obviously going to be a constraint. We're still not convinced that the Fed will go 3 times, for instance, this year. But I think if we try and work out the idea of the dollar and how far it can go this year, I think it's necessary to look at that in terms of looking perhaps at the euro as well. The euro is pretty strong. Fundamentals in the euro over the last 12 months appear to have really strengthened, both in growth but also in political risk. And I think with the euro being strong, in a way that's exacerbating the weakness or the perceived weakness of many US fundamentals right now.